Hey harvesters, and welcome to Project Premium Harvest. My name is Matt. In today's video, we're going to be going over the trades I executed for May 14th that netted me a massive amount of $315 in a single day of premium. We're going to be talking about all the trades I executed, the strike prices I chose, and the considerations I took into running each trade. I'm going to break it down as simple as I can for the common person to understand, guys. And the whole point to my channel is I want to produce income. I want to produce premium. And I want to see if I can do that on a daily, weekly, monthly, and yearly basis. And I have other investment accounts that are for the long term. I'm doing other things behind the scenes to get the long term well dialed in. However, I want to find a mechanism that's a relatively safe mechanism that will propel me a little bit faster to get to the end goal of making a determination of financial freedom. Do I need to work, or could I just start running options in my free time to then supplement my income if I don't want to work anymore and maybe retire faster? So if you're interested in doing something like that, follow my channel, subscribe, like the videos, leave some comments. That's what this channel is all about. It's all about making premium in the safest, most common sense way possible for everyone to understand. With that being said, for anyone that's a returning subscriber, you know me. First thing I like to highlight on the channel is my account value, currently at $95,350.65. And let's move over to the spreadsheets. All right, guys. So let's talk about May 14th and what happened. What I'm going to do first is talk about the theme of what happened. So there was 4 different options events that played out. 3 of them were covered calls. 1 was a cash secured put. I had 200 shares of SPY going into May 14th. 100 shares was from a cash secured put from the previous day, May 13th. The other 100 shares were from shares I bought about 2-3 weeks ago, and I have been choosing very conservative strike prices that weren't going to necessarily get assigned, but then racking a little bit of premium because the goal for the 100 shares of SPY was to catch some of the appreciation. For the 100 shares of SPY that were assigned from a cash secured put, I was trying to sell them at the money, racking a lot of premium, and then because these cash secured put for SPY was assigned, I'm using about $50,000 in margin. So by me trying to sell at the money, I'd make a higher premium. I would offload the shares, and then I'd be able to remove my margin by the end of the trading day. It didn't play out that way, and none of my shares were assigned because it was off about 41 cents, which not necessarily a bad thing. I'll just rinse and repeat the at the money covered call again tomorrow morning, rack in some premium, and try to get them basically offload those shares tomorrow. For my second set of 100 shares of SPY, I was doing my normal conservative, choosing something $5, $4 away, not necessarily trying to get the strike price assigned or my shares assigned. I just want to rack in a little bit of premium, capture some upside, rinse and repeat, same thing next day. For my IWM, I did another covered call here. Same concept with my cash secured put 100 shares of SPY. I wanted to sell at the money, offload these shares so that I can basically clear up some more collateral so I can run some other different options trading. And then for QQQ, because I had a little bit of options collateral left over, I had enough collateral to do a cash secured put on QQQ, but I did not have enough collateral to run a cash secured put on SPY. So what did I do? I just ran a cash secured put on the QQQ, and then I made some money. So let's dive into the actual numbers of what happened. So for my first 100 shares of SPY, I bought them at the 587 price per share, and then I made about $167 of premium running a at the money covered call. I chose a strike price of 588, and when the SPY opened today on May 14th, it was $587.81. So I basically chose something that was 19 cents away from at the money, and with the hopes of that being assigned. Didn't happen, but racked in the $167 of premium. So for my next 100 shares of SPY, the price I bought, so let me call an important object here. So the price I bought was the 587 from the cash secured put from the other day. I will not choose a strike price that is below 587 because then you are into the territory of potentially risking selling these shares at a loss. Yeah, the premium might be higher, but then selling your shares at a loss is never a good thing. You can gamble with like choosing a strike price below your dollar cost average amount, but then you have to be on the market, have a plan ready to like either roll the option or buy the contract back if you're not willing to sell the shares at that loss. So that's a call out. So then going back to the second 100 shares of SPY, bought the 559.62. So basically I can choose a strike price, anything above this 559 without losing any money. Right now, the SPY appreciated about $30. So I chose a 591 strike price when the market was trading at the 587.81. So I chose something about $4 away. And from what the market was showing in the morning, I didn't think it was going to go any higher. I think it was going to be flat to neutral to a little bit down. And what happened from when the market opened at the 587.81, it went a little bit down about, what was that, 20 cents, 22 cents. Nothing too great. That's exactly what I wanted to see with that 100 shares of SPY. For IWM, I wanted to offload the shares. I bought them at $208.51 per share, made $24. I chose a strike price of $209. So basically would have got $49 of appreciation plus this $24 of premium. The shares were not assigned, kind of sad, but guess what? We'll rinse and repeat the next day, tomorrow. And then for QQQ, I made about $72 of premium. I chose a strike price of $513 when the QQQ opened at the 516.75. So that was a relatively close strike price because I was trying to maximize as much as possible some premium. And then when the market closed today, it was actually positive for QQQ, is at the 518.68, and the shares were assigned no because they did not go below this 513 mark. End of the day, I made $315 of premium, which was a massive day. I wanted two sets of cover calls to get assigned, 100 shares of SPY, 100 shares of IWM, but that didn't happen. We'll just try to rack in as much premium as possible tomorrow. Two strike prices that are relatively at the money, and then we'll see how the day progresses. All right, guys, now let's go over to the holistic view of the last 23 trading days. All right, guys, now that we are at this tracker, let's take a look at the numbers. For May 14th, we already talked about it. We made $315 of premium, and then my account's looking like my account value is at $95,415.79. If we look at the difference from when I started trading these options, April 11th, the account was at $86,312, and currently now it's at that $95,415.79. About $4,478.53 was me trading options, and the rest was just appreciation I was catching from choosing strike prices that was super far out of the money. At the end of the day, being up 10.55% in about a month of work, that's pretty impressive to me. Let's take a look at my trade win percentage. We're at 95.65%. I won 22 days trading, lost 1 day, and then in total, we had 23 days. The average premium that I'm making per day is about $194.72. If we look at that as a weekly rate, that's about $895.71. The average monthly premium, I haven't really changed. This $3,717.53 is from 20 days of trading. Usually in a month or somewhere between 20 to 22 trading days when the market is open. So I lowball the number. I usually like to lowball numbers, then highball the numbers just to keep expectations at a manageable rate. So that's the number I came up with. Once I get more data and data points to pull from the average monthly values, then we can come up with a more accurate number. But for now, this works. Let's talk about the average yearly premium. So what this is if we took this average monthly premium and multiplied it by 12, because there's 12 months in a year, believe it or not, it would be about $44,610.36. And if we look at that as a average yearly percentage return, that's about 52% if we're comparing this to that $86,000 number. If you're asking me, SPY in all of its history has never gone up 52%. So this estimate alone might be very optimistic. Obviously, the market could change. It can go back down. It could go even further up. We don't know what's going to happen, but just from what we have observed over this last 23 trading days, this is what the numbers are. As the numbers change over time, this yearly average and estimate is going to change. This yearly percentage is going to change, but it's always nice to kind of project what we're going to potentially see a year from now, 2 years from now. Maybe I'll come up with some numbers, what potential return looks like from 2 years from now, 5 years from now, maybe even 10 years from now. Who knows? That might be interesting. Let me know in the comment section if that'd be interesting to see. But for 2025, we have about 8 months left, maybe 7 months left at the end of May. So I'll probably make an extra like $29,740.24 by year's end. This is kind of the goal that I'm shooting for to hit by December 31st, 2025. We'll see if we get there. All right, guys, for the weekly tracker, over the last 5 weeks, we had interesting developments in the trading. I had one losing week, but then 5 of them were positive, or 4 of them were positive. Currently, the 6th week that we are on right now, we are already at $861, which is beating out what we did last week and we still have 2 trading days left. So maybe this week might be the second most profitable I've ever had without even having shares assigned. So we will see if what happens and if that's the case. Looking at the monthly tracker for April, we made about $2,289.53. For the month of May, we're about $100 away from reaching what we've done in April. So that is quite exciting. But in May, we are currently at $2,189. And the yearly tracker is what we've already talked about at this total. It's $4,478.53. So I'm going to head over to Robinhood. We're going to talk about some of the options trades I'm going to do for tomorrow. We're going to talk about my 200 shares of SPY, 100 shares of IWM, and then we might run another QQQ cash secured put. So let's go over to Robinhood, talk about the individual tactics at the ground level, and let's get that ball rolling. All right, guys, now that we are back at Robinhood, let's go over to SPY and let's click on it. And let's head to my favorite button of all time. We are going to be looking at the multi-printer button, which is trade SPY options. We're going to be honest here. See this buy option, this buy call. Don't do it. 90 to 95% of options traders that do buy call lose money. So let's keep this nice and safe and secure and just do sell calls, because that's going to be the safest bet, and sell puts for cash secured puts. Let's first start off with the 200 shares of SPY I own and talk about the 2 different scenarios. So usually what I like to do for my options trading is I like to choose a fund that you can trade daily. SPY you can trade daily, IWM you can trade daily, and QQQ you can trade daily. That is why I like to choose those specific funds. For the first 100 shares of SPY that I own, I'm going to sell them at the money. So the ones that were assigned at the 587, I'm going to choose this 587 strike price. Maybe I might choose this 588 strike price. So my first set of 100 shares of SPY, I'm trying to get rid of, trying to rack in that premium, trying to offload it so I can de-margin myself. So that's the first set I'm doing. But the second set of 100 shares of SPY, we're going to go into a little bit more detail. So right now, the SPY is trading at the 585.80. So the way I start, just my safest form of investing, is I'll choose something $5 out of the money and see what the premium looks like. So the premium is about $103. So the way a covered call works, kind of explain the backstory behind it, is 100 shares of an underlying is one options contract. One options contract is what we're seeing here for the bid price. So for this strike price of the 590, an investor is going to pay you $103 upfront to basically lock in to buy your shares at this $590 rate if the market goes that high. So there's 2 scenarios that can happen here. The first one is investor pays you that $103 of premium. They choose a 590 strike price for you to sell your shares at. The market doesn't go anywhere near 590. It hovers at this 585.76. So basically, you keep that premium that investor gave you up front. You keep your 100 shares of SPY, and then you rinse and repeat the next day because you're running dailies, or at least I am. The second scenario that can happen is we choose that 590 strike price, but then the market blows way past, and say, for example, it goes to the $600 strike price. So what happens here is, even though the market went up to $600 a share for SPY, you locked in your gain at this 590. So any appreciation from 590 to about $600, you basically lost $1,000 of appreciation, because for every $1 the SPY goes up, that's $100 of appreciation. But we will say this: if we do choose that 590 strike price, the investor is going to pay you that $103 of premium upfront. The market is going to appreciate from 585. Get off this look here. The market is going to appreciate from 585 from here all the way up to 590. So you'd get about $500 appreciation plus this $103 of premium. You made $603 in one specific trade. So that's how that works. Now for cash secured put, it's a little bit different. The way a cash secured put works is an investor is going to pay you an upfront premium to offload their shares at a specific strike price. So let's say, for example, we're looking at the 585. Let's start by looking at something $5 away from the money. So let's look at this 580. We'll make about $36 of premium. Let's pretend to select this and run all the options administration stuff here. So investor pays you an upfront premium. They're going to pay you $36 to lock in offloading their shares at the 580 if the SPY goes down to that point. First scenario happens, the SPY never goes below this 585. The investor is going to pay you that money. You keep that money up front, you rinse and repeat. And the only thing that you need to bring as an investor is collateral. That collateral could either be margin or it can be cash. And so with this first scenario, if the SPY never goes close to this 580 mark, it goes to 581, 582, because the way that cash secured put works is you have to have the strike price be at the money or lower, versus covered call is the opposite. Say we choose that 590 strike price. For the shares to get assigned, it has to be at 590 or higher, like 591, 592, etc. But going back to cash secured put, so that first one happens, no assignments, good to go. But the second one, and we'll explain what the negative impact can be, is we choose this 580 strike price. The market continues to go down, blow way past that 580 mark, and we're at this 570, right? Now that we're at this 570, you locked in buying the shares at this 580. So theoretically, you lost $1,000 of appreciation if the market went down to this point. So that's one negative thing. So then the side effect of that is you have the SPY shares at this 580. For you to sell covered calls and not lose money by accidentally selling something below your cost basis at that 580, your premiums are going to be significantly lower. So there's a couple of things you can do here. You can wait out, and you can wait till the SPY goes back up to this 580 mark to start getting premium back, or you're going to sell at a loss, or you can run options that are below your cost basis, but you have to have a plan in place just in case you need to roll them or buy the option back so you don't sell your shares at a loss. So there's a couple of different thought processes there. Let's go over to IWM. IWM, I'm going to sell at the money, so it isn't anything different than what I already showed for selling SPY at the money. But same concept here. Make sure every time you run in options, you double check to do sell call. So I bought IWM at $208.51. So I'm going to choose a strike price that is higher than $208.51. So it's going to be this 209. So I'll probably make about $30 of premium. No risk of me losing money at this 209. I actually make $49 of appreciation plus this $30. So a double win if you're asking me. And then let's look at QQQ. For QQQ, I plan on doing a cash secured put because that's the amount of collateral I have left over. And I still want to maximize my return. So let's do sell put, make sure we're on expiring May 15th, which is tomorrow, Thursday. So currently the QQQ is trading at this 517.40. I'll probably choose a strike price maybe $3 away from this 517. Yeah, I'd be fine locking in that same strike price I chose today at the 513 for $73. Yeah, guys, those are the 4 different plays I'm going to execute tomorrow. The market could potentially change and go up and can go down, but that's kind of the general idea of what I'm going to execute. If you have any questions, let me know in the comment section. I'll do my best to answer them. But yeah, guys, that's the video. Matt out. I'll see you in the next one. And